Welcome back, investors, to Ticker Time News. I'm Adam. Thank you for joining me today for the After Hour Show. We've got a bunch to talk about. I have a stock that I want to present to you for potentially a nice 2022 stock to hold in your portfolio. I also want to talk about Victoria's Secrets and their earnings that came out today. Also, what's on your mind? Because that's the most important thing about the show, is talking about your questions. So if you do have a question, leave the ticker symbol and your question in the comments, and we will go over it live during the show. All right, so until then, I'll just run through a few stocks I want to talk about. But before I get into those, I do want to mention that Weibo has a special promotion happening right now. They've extended it. 5 free stocks on Weibo. If you have not signed up for a Weibo brokerage account yet, go ahead and do so. It's very easy. Click the second link in the description or the link in the chat. Set up your account. It takes just a couple of minutes. Deposit any amount. That's the coolest thing about this. Deposit $5, $10, it doesn't matter. And then get your 5 free stocks. It's worth up to $8,300 for, I guess, the lucky winner, you could say. But yes, it is free money, so do take advantage of this offer. It also helps out the channel, so it's a win-win for everyone. So again, tickertimenews.com/Weeble, second link in the description or the link in the live chat right now. All right, so let's talk about stocks and the market today. What's happening? What's going on, Devin? I haven't seen you in a while. Hope you've been doing good. Something got my attention recently. Just started doing due diligence, but what can you tell me about early shares, like their current offering is an IPO or SPAC pending? All right, let me look them up and see what I can find for you, Devin. And again, I hope you've been doing well. All right, let's pull it up here and look. All right, so we got all right, just bear with me for a moment. Okay, cool. Yeah, it's been a weird market recently, that's for sure. It's just it's on weak legs. It keeps bouncing around. I'm not, yep, I figured that out when I put them into all right. So just to make sure, is this the solar electric vehicle that requires no charging for most daily use? Okay, got it. All right, now I'm looking into, they have an investor presentation, the next generation of clean. Whoa, look at that car. Let me pull this over here to this screen. That is a funky car. Wow. That almost looks like one of those three-wheeled motorcycle type deals. I totally forget the name of them. Sign up to invest, minimum investment $1,000, per share $8.80. So it's a private offering. Okay. I have not looked into them yet. But it's a neat little vehicle. Okay. So 54 million shares outstanding, $8.80. Okay. $8.80 a share. Yeah, it could definitely be a growth company. It's got such a funky look to it, much like the Cybertruck just totally took what everybody is used to looking at in a vehicle and just totally reimagined it. All right. So I don't have anything that I could say specifically uh, about them. This is the first time I have looked at them, but I can definitely read into them and come up with something about them. So there's two. I'll have to do some digging on the company, but yes, they do have two paths. It's either an IPO, a DPO, or a SPAC, and it could very easily uh, become a SPAC, but it doesn't look to me like that would be the road that they are taking. I'm sure it says in here their roadmap. I would imagine that this type of company would go the traditional IPO route. I don't think there expect see usually a company that's going to go the way of SPAC, they are having either trouble raising money or they want a quick way to get to market. So it looks like these guys, um, it looks like these guys want to go the more traditional route, which is a little more costly for a company to do, but you can raise so much more money that way. All right. This is really interesting. Okay. All right, I'll do some digging on these on this company, Devin, and try to get the best possible answers for you. See, I would only invest privately like this if I knew the company really well. If I had some connection to the company, if I knew somebody that knew somebody that maybe knew somebody, because I wouldn't want to invest unless I understood their roadmap, I understood their the CEO and how they think. And I'd want to make sure that my thoughts on how a company moves forward kind of align with their current roadmap. And then one of the biggest things, I guess, that I would be looking for is whether or not there's a market for this. How big of a TAM are they looking at? What's their total addressable market? What do they think it is? Because to me, this almost looks like a fun little sport vehicle that you might have in a beach town or I don't know. It just doesn't look like this would be a mainstream type of vehicle, which means that its TAM is going to be much smaller than, say, a Lucid, for example. I mean, it's of course the vehicles are totally different and they're going after a different segment of the market, but you always have the risk too that they don't make it to market. It is funky, yeah. It is definitely pretty cool. Okay, I'll do some digging as well on this, and I'll just share whatever I find on it. Um, they've got some YouTube videos up that I'd like to watch and just hear what they have to say about their own car. It is definitely wild looking. All right, all right. So I'll look into this, Devin. I want to watch some of their videos and dig into it. It claims to get 1,000-mile range when fully charged, and it commutes just on solar. So it's got some interesting features to it. To me, though, and in my thinking on it, I think it may just be a little bit ahead of its time for any type of mass market appear, not appear. For example, I just came across the wire a few minutes ago. Ford Motor Company. New York City orders 184 all-electric Mustang Mach-E SUVs, according to a Bloomberg report. So this is going to be one of those. See, this is like yesterday I talked about Sweet Green, and that's a fast food type of restaurant that offers healthier meal options, like salads, for example. And Sweet Green has a good growth story. It has a really good story, but the story is not completely. It's not wholeheartedly green or clean, I guess I should say. And even though I like the company and I like what they're offering, I like that healthier choice, I don't think it's got mass market. I don't think people are going to stop eating chicken nuggets and hamburgers overnight and switch to salads. So it's definitely in a niche market. And just off the top line of this thing, it looks to me like that's where this will end up. I don't see it going mainstream, but that doesn't mean it can't be a good company. It just means we may have to put a lid on how big this could actually get. And I guess they're trying to raise a total of $75 million with this offering. So of that $8.80, $8.71 would actually go to the company. So yeah, I'll do again. I seem to be going around in circles here, but I find it interesting, and I just keep doing a little more reading on it. But I'll dig a little deeper on this one, and maybe I'll have found enough to talk about, and I'll talk about it in tomorrow's video. But yeah, it reminds me of Sweet Green so much. Ticker symbol for Sweet Green is SG. Okay. What do I see here? David, you said 25,900 to 50,700. What was that for? Did I miss something? Looks like a go-kart. Yeah, see, like in a higher end neighborhood or a neighborhood built around a golf course, or even a neighborhood I used to live in where it's a real tight community, you would always see golf carts driving all over the place, up and down the road, going to the different parks in the community and so forth. And it's kind of like where this would fit into, but obviously a step higher than a golf cart. I think it's a little bit more than that. It's got some cool technology though with the solar charging ability that could be picked up by a larger company. So keep that thought in the back of your mind too. Um, the vehicle may never make it to market, but the technology that the vehicle has, if they have some unique patents that could help a larger company, like a Ford, for example, or even maybe a Lucid, maybe they have some sort of patent on some kind of technology that would really help out a larger company already manufacturing vehicles that has the capital to spend. Maybe they get bought out. That's a possibility as well. So I want to dive in to see what patents they may have as well. Yeah, Arcimoto, very similar. Arcimoto looks like it's a little funner. This one looks like it's a little more serious, just off the design differences. You're welcome. I don't think I gave too much of advice there, but I will look into it this evening and see what I can find and then talk about it tomorrow. I just don't want to sit here looking dumb, staring off to the screen while I'm just reading. But interesting. Did I see a comment that they have a bigger production facility with nothing in it than Arcimoto? Are they linked to Arcimoto in some way? David, a question. But who will pay $25,000? Okay, gotcha, Devin. Who will pay $25,000 for a vehicle like this? Why does somebody pay $15,000 for a souped-up go-kart or a souped-up golf cart? Because they want to. And that's why I'm saying I don't see the mass market for this, but there could be a corner in the market that they could capitalize on. I know it looks like it wants to be like a commuter vehicle, but and you know, maybe some person might see a value in a commuter like vehicle like this, but yeah, I'm just kind of spinning in circles here. Okay, they're just two I'm looking at this week. Okay, all right. Well, I'll dig into them this evening, and I'll talk about what I find tomorrow. Hopefully, I can find something worth talking about that maybe you haven't already found. Okay. It is a funky car. Okay. All right, then I'll just do, and if you have any other questions, feel free to ask. That's what I would much rather do. And if I miss something, I apologize. I'm trying to make sure I catch everything. Just ignore that spam comment. All right. So let me put you back over here and bookmark you so I can look at this. Add to reading list. Done and done. Okay. Same thing here. Add to reading list. Okay. All right. All right. So I'll do the opening monologue just real quick, and then there's a whoa. What was this? All right. So I'll do the opening monologue right quick, and then a couple stocks to talk about. One for 2022, a stock idea. All right. So today in the market, stocks definitely traded a little on the mixed side, and a lot of that is due to low volume, and we'll see that for the rest of this this week. As you can see, on the chart here, this is the S&P 500. This is the daily view. Look at the candles on the bottom, red and green. You can see that volume is falling off and it's going down. Today's volume on the S&P was 1.3 billion with an average volume of 2.2 billion. Whenever we have low volume, things can escalate quickly and they can move at a much quicker pace. So you can have swings up, swings down, red, green, because of the low volume. It doesn't take much to move something when there's not a lot of volume in the market. So just keep an eye on that. That's something that is plain as day. We can see it. If I scrunch this up here and look at the whole year, right, we have to go all the way back to, look at this. I'm going to put a line right here. This is where today's volume was at, right? And if we go back all year, volume was never this low until we get to December of 2020. This always happens every year, okay? So just something to be aware of, that volumes are low right now. And that's a historical precedent that happens every December, the last week. You always get lower volumes because people are taking off work for whatever reason they may be doing so. So the Dow Jones today did extend its rally for the 6th consecutive session and added almost 100 points to reach a new all-time high. And that was mainly sustained by a 1% move, or over a 1% move, I should say, in P&G, Home Depot, Nike, and Walgreens. They were both up today, or all three of them. The S&P 500 did rebound from yesterday's fall and end up rising 0.2% to a fresh record high. And that was mainly due to a surge of over 9% in Biogen stock after a report showed that the company is in the process to be acquired by Samsung in a deal worth $40 billion. On the other hand, the tech-heavy NASDAQ, it slipped 0.1% as tech stocks were dragged down by expectations of higher interest rates, I guess, right? That could be because it always affects tech and growth. Now, the 10-year yield, it did increase by 5 basis points, which isn't much, but it did go up. Still, though, investors, I think, are keeping an eye on what's happening with the virus, right? What's the latest headline about Omicron? Or what's the latest count on COVID cases? To me, personally, I think the Omicron virus may have a silver lining to it. For those who, and this is not a political argument in either way, so I'm right down the middle on this. This is finance, not political commentary. Omicron, since it seems to spread much more quickly and easily, and the symptoms seem to resemble the common cold for the most part, not 100% of the time, then maybe this will help to protect us in a way, because once you get it, then you have antibodies, right? Not a doctor, so don't take my word on it, but there could be a silver lining to it. But above anything, do talk to your doctor. Don't listen to anything some Yahoo on YouTube is talking about, okay? Just something that, my perspective, that I wanted to point out there. So, I know cases did double, or just about double, in December. So that's why I'm thinking that maybe a bit of a silver lining. It gives me optimism, though, that the outbreak won't affect the economic growth of our economy, which is a good thing. And the only reason why I'm talking about it in the first place. I don't want to turn this into a health or political channel by any means. We're actually trying to build a business here. I've already looked at potential sources for writers to come in, and that would be very helpful, and that would be very valuable for all of us. Okay, so I do believe that trading conditions, though, are on very thin ice, particularly the New York Stock Exchange, ahead of our New Year's festivities at the end of the week. Now, this observation, plus the lack of any market-moving news, suggests that there's not a lot of conviction in today's trading activities. 8 of the 11 S&P 500 sectors did close higher, yet no sector rose more than 0.7%. The healthcare sector up 0.6% and real estate up 0.6%. Those sectors tied for the lead, while the communication services down 0.3% and energy down 0.6%, and then financials down 0.1%. They were the three that finished in negative territory. The lack of conviction was further manifested in bank stocks, showing little interest in the steepening activity in the treasury market. Likewise, the energy sector closed lower despite an increase in oil prices. It is back up to 76.50, I believe. $76.50 per barrel, and it was up just over 0.5% today. The Spider S&P Bank ETF, ticker symbol KBE, that increased just 0.1%. Growth stocks, which were possibly trading lower intraday because of higher rates, like I said earlier, recouped some of their losses as the session played out into the close. The Russell 1000 Growth Index closed fractionally higher after being down 0.5% intraday. All right, here's the leaders for year to date so far. S&P's at the top. It's up 27.6% year to date. NASDAQ is second. It's up 22.3% year to date. The Dow Jones is third, up 19.2% year to date. And the Russell 2000 is fourth, up 13.9% year to date. Now, these gains, especially in the S&P 500, are wonderful. They are really good gains. If you think back in the past decade, 2 decades, 3, and so forth, what's the average? 5, 6, 7% a year? And here we are with the S&P over 27% year to date so far. That's a 20% extra boom in the S&P 500 this year. So in 2022, I think some of the themes that we saw this year are going to change a little bit. I think in 2022, it's going to be all about who makes something. NVIDIA, for example. I think is going to outperform in 2022, just like it outperformed this year, because it makes something. And whenever we have interest rates rising, that means future earnings are starting to lose their value. Therefore, investors are going to want their profits today, not in the future, because those profits today will have a lower value in the future. So NVIDIA makes something today, it sells it today, it gets a profit today. That's what I believe investors are going to be looking for in 2022, because they don't want their money losing value. And that is going to hurt growth stocks. It's going to hurt technology stocks. Anything that has a high multiple, the higher the multiple, I think higher the pain for 2022. And that's all because of interest rates. Now, inflation will play a role as well. If we don't get a lid on inflation, that's going to hurt the value of future money even more. So a big theme that I'm pretty sure, I'm very confident about for 2022 are to own companies that make something today. All right, just wanted to share that. All right, let's go look at Bitcoin. It's having another red day, but it is holding above the 46,500 level, at least last time I checked. BTC USD on TradingView. There is a link in the description for a free account to TradingView. All right, Bitcoin is doing something that it did last week, 2 weeks ago, and that is hug that 200-day moving average. If I open this up a little bit here, you see in this yellow box from a week ago, 2 weeks ago, Bitcoin was really hugging that 200-day moving average, which went right through this yellow box. I can now extend this yellow box out, and the top of this yellow box is going to be where the 200-day moving average is. And that's where Bitcoin is hugging. Now, Bitcoin also bounced off of this, it's a weak support level, but it is an area that found support in the past, and that's at the 46,500 level for Bitcoin. It's at 47,200 right now. It got as low today as 46,596, so just a couple dollars below that support level. Now, it's a weak one, but it is a support level, 46,500. I've talked about Bitcoin and what I would like to see Bitcoin do, but we have to be realistic here. Bitcoin right now is up 62, almost 63% year to date. What was the S&P up this year? The S&P 500 was up over 27% year to date. So Bitcoin as an asset did outperform the S&P 500 by a mile, a wide shot, right? Over 27% year to date for S&P 500 and nearly 63% year to date for Bitcoin. I do believe Bitcoin has the potential to outperform the S&P 500 in 2022. So what I'm trying to say, or what I'm trying to do, is to put Bitcoin in a grander scale than just what's happening today. This is Bitcoin for the year, right? Beautiful Wyckoff flow right here. Look at that. From the beginning of February all the way to the middle of May. Beautiful. Almost perfect. So Bitcoin has been very choppy this year. But to put it into perspective, S&P 500, 27% year to date. Bitcoin, nearly 63% year to date. It outperformed. That's all we can ask for, right? As investors, that's what we're looking for. We want to beat the market. We want to put our money in places that will beat the market. Whether we have a 1-year time frame, 5-year time frame, 10-year time frame, it doesn't matter. Whatever our goal is, the basis for any of our goals in the market as investors is to beat the returns of the market. And as long as we're doing that, we are winning. So even though Bitcoin is off of its high of 69,000 and it's down to 47,200, that is still 63% better than it was a year ago. Well, a little bit more than a year ago. We haven't finished this year quite yet. We still have a couple more days, right? Okay, so I just want to put that into a perspective for you, just to help you see see the forest through the trees, or however that metaphor goes. Let's look at Ethereum, because when we compare Ethereum, ETHUSD on TradingView, we look at Ethereum for 2021, and it has outperformed Bitcoin by a humongous gap. Ethereum is up just over 400% year to date. So if you bought Ethereum 1 year ago, your money would have multiplied by 404.5%. So Ethereum outperformed Bitcoin, which outperformed the S&P 500, which outperformed the Dow, which outperformed, or I guess I should say the NASDAQ, which outperformed the Dow, which outperformed the Russell. So don't get caught up in daily movements per se, unless you're trading. When you're trading, you've got a different mindset. Right now, I'm in the mindset of an investor. And all I want to do is beat the market within the time frame of my goal. It's really that simple. And Ethereum totally blew it out of the water. Over 400% year to date. That's a really, really good return. When you look at historically, the S&P 500, 5, 6, 7%, it was a really good year. So I'm just trying to provide a bit of optimism as we get ready to close out 2021, and everything starts over at zero. When the get back on, what is it, January the 3rd, everything starts back again at 0. And we're off to the races again as investors or traders in this market. All right. So there's Bitcoin and Ethereum. And let me scroll back in here on Ethereum, because Ethereum did today, it fell below this trend line right here. Now, Ethereum has been using this trend line as a bit of a support structure. You can see these candles come down here. They touch it at some points. Sometimes they break below it, but it's just the candle wick that usually comes down this low. Well, today it did break under, and the candle is under, not just the wick, but the whole candle is under that trend line. Ethereum's at 37.25 right now. Okay, so there's Bitcoin and Ethereum. Looking at the grand scheme of things, I guess I should say there, on percentages year to date, because those percentages matter. They mean something. They show us what we were able to accomplish for the year, right? Okay, so there's a overview of the market. There's an overview of crypto. Just getting 2021 back in here. There we go. There's 2021. Cool, huh? When we look at the bigger perspective, it helps make us feel a little bit better, right? I know it does for me. Okay, let's move on to a particular stock that I want to talk about. And this is a stock idea for the new year. So with the new year upon us, I have started to post investment ideas for 2022. I started doing that in yesterday's video. Today, I wanted to steal, S-T-E-E-L, steal, a few moments to talk about Cleveland Cliffs. Ticker symbol CLF. All right. Cleveland Cliffs. Look at this. There we go. 2021, ladies and gentlemen. Cleveland Cliffs this year, let's go down here and look, is up 42.7% year to date. Okay? Over 40%. It beat the S&P 500 too. But let's talk about Cleveland Cliffs for 2022. Now, I was bullish on steel when I talked about steel dynamics. Oh my goodness, had been last December. It was a 2021 investment idea. Now, it turned out to be one of the best movers. It was up 67%. And at one point, it was up over 100% before pulling back from its highs. I still remain bullish on steel dynamics. However, I decided to go with another steel producer that's probably on fewer watch lists right now. Here's why I like it for 2022. Cleveland Cliffs has been on a remarkable transition in recent years. Until a few years ago, it was merely an iron ore supplier to steelmakers, and it didn't produce any of its own steel. Fast forward to today, and it's a major producer of steel. In March 2020, it acquired AK Steel. Then in December 2020, it acquired I miss this. I get this name wrong all the times. Oh, come on. Oh, it's right on the tip of my tongue. I always forget this acquisition. Anyways, there was another acquisition. Oh, I can't believe I'm drawing a blank on the name. Oh my goodness. Okay, so there was another acquisition. Totally forget the names. Anyways, Cleveland Cliffs has become the largest flat rolled steel producer in North America. That is saying something. Cleveland Cliffs also recently acquired a processing and trading, a FPT, a major scrap producer. Now, Cleveland Cliffs is a great way to play what should be a nice rebound in automotive in 2022. Now, I know this is bucking up against a little bit of Cathie Wood's beliefs about automotive and the inventory sitting in consumers' driveways. I get that point. But hear me out for a moment. Cleveland Cliffs is by far the biggest supplier of automotive steel in the US. It supplies something like 2.5 times more steel to the automotive industry than the second largest supplier. And more than second plus the third largest players combined, I believe. Fact check me on that one, but I think that's true. Volumes were down in 2021 as automakers slowed production due to what? Chip shortages. That's right. At least that's what we hear. I mean, did Tesla have that chip shortage problem? Not like the other automakers did, because Elon Musk looks into the future. Back to steel, though. That shortage should start to slow down in 2022. In addition to volumes, Cleveland Cliffs should also benefit from higher steel prices. Inflation. Some of its business is based on spot prices, but some on legacy fixed price contracts that were based on steel prices from a year ago. Steel prices rose dramatically in 2021, and the bulk of Cleveland Cliffs' annual fixed contracts for automotive, as well as appliances, stainless steel, electrical steels, plates, and tin plates, all of them reprice at significantly higher levels in 2022. In fact, Cleveland Cliffs accelerated some planned maintenance outages to take place in Q4 that had been originally scheduled for next year. This way, Cleveland Cliffs can do better in 2022. All right. So this is definitely one of my stock ideas for 2022, and I think it can do pretty well. I think the steel industry can continue to do very, very well in 2022. So keep this one on your watch list. Here's what I'm looking at technically now for this. If I go back a bit, you can see that in 2020, it ran up, but it didn't have that big of a rally. Basically, by, let's call it the beginning of November of 2020, it was getting back to its high right here before the big fall of March of 2020, right? So it was just getting back to those levels. Now, the big run was a very choppy run, but it was a run nonetheless. And if we measure this, we're going to start at the new year right here on January 4th. Okay, so we can capture this from this year's perspective. You can see this trading channel that it traded in all the way to this peak right here. Now, this was a 93% run. Very choppy though. You can see it went up and down like a heart monitor, right? These bump, 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 bump all the way up to 93% before falling to its current level over here. And this is right now, it's about 51, 52% year to date here. As far as entry points now, here's what we're looking for. We can see this bottom that kind of occurred here, September, and then again here in December. So I'm going to put a line here to capture these bottoms. It's right about $19.25. Right about there. So you can see it captures these bottoms here in December, and then it captures this bottom here on October 1st, and then this bottom here on September 21st. Now, these two bottoms here, September and October, did bounce off the 200-day moving average. Today, however, it is under that 200-day moving average. That's important to note. It's also below the 50-day moving average, and I can't believe it. In every live stream, I think I've talked about the 50-day moving average and why that's important, but I don't think I don't think I talked about it yesterday. I can't believe it. Yesterday, I believe was the first day I didn't mention it. But when a stock or a security or an asset, when it's below its 50-day moving average, that means it's a negative or bearish structure. If it's above the 50-day moving average, then that's a positive or bullish structure, right? Yes. Okay, so it is showing a bit, or showing signs, I should say, of weakness right now. Below the 200-day, below the 50-day, but it is above its 21-day moving average. So it's kind of getting trapped here in between these two, which is good because that could provide a little bit of pressure. Now, if we look at volumes, we already know, because we talked about this at the very beginning, that volumes decline in December. The further you move along in December, the steeper the decline is on volume. So we have a bit of a convergence here between lower volumes but a rising RSI. The RSI is at a 52 right now. So it's kind of right there in the middle. Not oversold, not overbought. So if we're looking for an entry point here, I'm looking for 1925. 1925. That would be a great place to set a stock alert. Set a stock alert. 1925. For Cleveland Cliffs, ticker symbol CLF. If you believe, like I do, that steel is going to run some more in 2022, mainly due to automotive, which I know goes a bit against what Kathy Wood thinks, then set a stock alert for 1925. We can get below that, that would be great. And if we want to put a range in here, there are a couple of points that are a little bit lower that are about 1850, let's call it 1850. 1850 to 1925. That would be the buy zone. Okay. Now remember though, one thing I want to point out, and this is just for new investors. Let me just show you a scenario. If you have a stock alert set for 1925 or somewhere within this range between 1925 and 1850, and the stock has been showing weakness and the stock is moving down, and then it breaks right here at 1925, boom, you get your stock alert. Well, if the stock is in a decline like this, and you have your RSI has also started to decline, right? Maybe volume, because it's the new year, has started to maybe pick up a little bit, at least getting back up to its average. So you've got a divergence here on volume and relative strength, and you have a weak price structure here where it's falling. If it breaks your 1925 stock alert in a position like this, that is not a signal to buy. That is a signal to watch and wait and be patient, because this is a signal that you could get in at a lower price. It's always important to remember that just because a stock alert goes off doesn't mean it's time to buy. Okay? Now, it breaks your 1925 stock alert, but it's in a very bearish structure or negative structure, right? All right, let's say the stock continues to fall, and somewhere in this range, it turns around, and then it starts heading back up. You can have your 1925 stock alert set so that when a stock's price is moving, your stock alert can be triggered when the stock is falling or when the stock is rising. So keep that in mind. If it breaks your 1925 stock alert and it's on its way down, that's not a buy signal. That's a wait and look, like I said earlier. Now, when it bounces and it's on its way back up, and then it passes your 1925, that could be a signal to buy. Sometimes okay, before I say what I'm about to say, that would be the view from an investor standpoint, right? You're looking for an entry point. You want to get in at a lower price. This would be a good sign that, okay, now it's bounced off of a bottom. This is a good entry point for a long-term hold. All right. Now, sometimes when you are trading, not just investing for long-term, I want to point this out for trading. You may see this bounce here, right? But that may not be a buy signal for trading. For trading, you may want to see it break above a key resistance area, which would be your 1925 since it dipped below that. And what you would want to see is the stock come up, come back down to 1925, but then bounce off of that, and that is your entry point for a trade. You want that confirmed retest, retrace. There's many different terms you can use for it. But you want to see that bounce off of that old resistance line now turning into a new support line. I know I've gone completely off topic here, from talking about stocks to talking about TA instead. Sorry for doing that, but I hope you did find some value in what I just talked about. I sure did. It's a good refresher to talk about it. Okay. Are there any other questions that you guys have you want to talk about? We've been going at this for about an hour now, and I don't want to take up too much of your time. I can always do separate videos for some of the topics that I had. So if you do have any questions, now would be a great time. Devin, if you are still watching, I am going to look into that company this evening and hopefully get something out tomorrow and during tomorrow's video for you. All right. So there's not a lot of moving in after hours right now. As a matter of fact, on the wire, it actually says companies trading higher in after hours in reaction to news. None. Not a single company. Not a single company. Companies trading lower in after hours in reaction to earnings or guidance. None. So it's a very slow time of the year. Volume's going down. Not much news at all being reported. So, yeah. All right. Well, I'm going to wrap the video up here. We've been going for an hour, and I'm going to try to be a little bit more aware of how much time I'm going here, and I want to try to keep it at an hour. I know I typically go way past an hour, but moving forward, I want to try to keep it at an hour. And if I don't get to a particular stock that I wanted to talk about, then I'll just do a separate video, a single video for that specific stock going forward. So that's kind of gonna be my game plan here for this, because I just don't want to keep going for 2 hours plus on a live stream. That can get kind of boring sometimes. Plus, it seems like, as far as talking about different stocks and so forth, it seems like more people are interested in watching about a particular stock than watching a live stream that talks about multiple stocks. So, as most of you know who've been following this channel for a while now, you know how I take in and break out those different companies and then upload them as a single standalone video, and they seem to perform better than the live stream itself. So even though it's the exact same information that's in the live stream versus the single video, I guess it's easier for people to digest that smaller section about one particular company than a hour, 2 hour live stream, right? Okay, so I'll wrap it up here. Just want to get that kind of explainer out because I didn't get to every stock, but that just means I'll create a standalone video for that. I want to talk about Victoria's Secret a little bit as well, because they had earnings today. So I'll just do that in a standalone video. All right, so thank you all very much for watching. I greatly appreciate it. Remember, if you did find value in this content, in this video, then there are 3 things that I would love for you to do. Number 1, click the like button. That lets YouTube know that you found this video to be informative, actionable, right? Helpful. Second thing, take the URL and share it anywhere that you can. That lets other people know that you found this video helpful, informative, actionable. The third thing is click the first link in the description that takes you to our Patreon page. And that helps to support our research, analysis, technical breakdowns. That also provides value. Now, we are working hard on trying to figure out what is that thing that you want and offer it as a bonus, right? Offer it as part of the tier for Patreon members. So do check that out. There are several tiers. We even have a new tier specifically to help us build this business. Okay? All right. That's enough rambling from me. So thank you guys so very much for watching. Thank you for the questions and the comments and the conversation. That is truly my most favorite part of the live stream. So thank you for that. All right, guys and ladies. Have a good evening, and I'll see you tomorrow around 5 p.m. for another after hours show where we can talk about whatever you would like. All right. Thank you guys so very much for watching, and I will see you in the next video.